I mix what I like, what I like, what I like, what I like, what I like. All right, good morning, everybody. Welcome to I Mix What I Like. I'm Jared Ball, and we're joined once again by Professor Hilary Allen, who, among many other things, is a professor of law at American University, Washington College of Law, where she teaches courses on banking law, securities regulation, and business associations. And we are here, of course, to talk about, I think, a powerful, bombshell, groundbreaking work, Fintech Dystopia. Professor Allen, welcome back to the show. It's good to see you again. Thank you for joining us.
Thank you for hosting me again. It's a pleasure to be here.
So, as we talked briefly before, if you would just, before I get into whatever I have to say and ask about, please, if you would give us an overview summary of what you've done here. The link to where people can get the book is already in the show description. Thanks again and in advance for the work. But what are you doing with this book?
It's a valid question because it's not your average bear. So what this is it's an internet serial. A chapter is coming out each week over the summer. And what I'm trying to do with it is take my many years of academic research on this space. So that's research that, I speak regularly with people in Congress and regulators all around the world and central bankers. And I've been sort of screaming from the rafters, if you will, for years about the dangers of crypto. And yet very few people listen to me, even though they often agree. So, I mean, they listen, but there isn't sort of, the policy doesn't change, notwithstanding the concerns that I've raised. And so I became increasingly sort of interested in the bigger picture of, why is it that people are so resistant to pushing back on what is, I think, clearly a really problematic thing with crypto. And so what I wanted to do with the book is to, first of all, sort of break down in a really accessible way the problems I see with crypto and also with Gen AI, because I see a lot of the same symptoms there of this sort of refusal to sort of engage with the fact that tech might not be able to do what they say it will. And that's sort of the first half of the book is sort of a lot about crypto. And then the second half of the book, which hopefully I'll get to talk to you about later, gets into Gen AI, but also sort of the cognitive psychology, the political economy, the money that's being thrown at regulators, at lawmakers, to get them to not understand the harms that all these technologies cause. And in fact, one of the most important points I make, and I start making this from the very beginning of the book, from the introduction, is that actually the secret sauce for a lot of these businesses isn't actually technology at all. The secret sauce is getting special legal treatment, which they get by telling very good stories about the technology. And then they get to compete on an unlevel playing field, and that helps them prosper.
Okay, thank you very much. So I want to, before I raise some first questions, and folks who are joining us live, please do take notes yourself and prepare some comments and questions. We'll get to them later on. So first of all, I appreciate that you're doing this as a serial, but selfishly, it's frustrating because I always like to read the intro and then the conclusion and then go back through the book. So that, and then I'm so, just like with streaming, binged out that I want to be able to binge and then, but I really do appreciate how you're doing it, and sort of the anticipation is great. Although I only got to chapter 4 and chapter 7 is going to drop tomorrow, so I'm a little bit behind. But
Okay.
but that's, again, I'll be finished by the time we set up part 2. So I definitely, there's so much to get to, and I did I did invite you to do like a per chapter interview, which I know is a lot, but it's just because there's so many tributaries and things that you raise that in my limited sphere raise so many questions and debates and arguments that so but anyway, but I get it. It's too much. All right. I do need to give a quick shout out to ZZ Lion, who got me to revisit all of this again more recently when he sent me a story about JP Morgan doing a 180, Jamie Dimon doing a 180 more recently, and saying JP Morgan is now going to get involved in, I don't remember the details, but get involved more supportively in a friendly way with Bitcoin and crypto. And then, we're getting all this news about everything's going so well now. That Bitcoin is I believe still pretty far up. Not actually, I need to double check that, um, but there is this idea that it's on its way, and now that Trump is talking about reserve currency and all this other kind of stuff, like the Bitcoin enthusiasts seem to be in a revival. So I said, oh no. I need to do whatever can be done to support the work of those like yourself to say, hold on a second. Uh, you know. So first, I did want to ask: do you have any particular responses to those most recent uh, 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 occurrent
Development.
developments? Thank you, and then
Yeah,
I will come back specifically to your book here.
yeah, sure. So, I've been working on or researching crypto for about 10 years now. And I would say about sort of 4 or 5 years ago, I started saying that if big finance is allowed to touch this stuff, that they won't be able to help themselves, right? Because what any crypto asset really is, with some exceptions of things like stablecoins or whatever, but most crypto assets are essentially Ponzi-like in the sense that there's nothing behind them. You can create them out of thin air and then sell them to people and borrow against them. And if you thought that Wall Street wasn't going to get into that, then you were kidding yourself. Now, Wall Street didn't get into it for a long time because they weren't allowed to by the regulators. And you mentioned J.P. Morgan and Jamie Dimon. I mean, they've been talking out of both sides of their mouth for a long time. So Jamie Dimon, famously said Bitcoin was stupid, and he was right. But he also, I mean, J.P. Morgan digital assets have been working behind the scenes on all kinds of things for years. So, this isn't really a new development that they're getting into this space. And so, this was always going to be highly attractive to Wall Street. And where we are now is in a bubble, and a bubble is particularly dangerous when the assets you're talking about are Ponzi-like with nothing behind them, because if that bubble bursts, they don't just sort of, you don't have a company that goes bankrupt and sells off its businesses and you get, a piece of whatever's left. There's nothing there. If people start bailing on this stuff, it goes to zero. So I say, it's tough because at the top of the bubble, that's when the hype is the biggest and the fear of missing out is the biggest, the FOMO. But buying at the top of the bubble is the worst thing you can do. And look, I can't predict if we're exactly at the top of the bubble. To go back to Keynes, the preeminent British economist back in the day, who said that the markets can stay irrational longer than you can stay solvent. Like, I can't pick where the top of the bubble is, but it's looking top-ish. And I never think it's a good time to buy into something that's essentially a Ponzi, but I think this is particularly not a good time to buy into something that is essentially a Ponzi.
So maybe with that point about it being essentially a Ponzi, we could start with where where at least in my notes have you starting with your book. That in other words, how do you end up as you start your book off by talking about testifying before the Senate Finance Committee in 2022, and because and what led you to being the person who's doing that, and what made you reach certain conclusions, including that it's essentially a Ponzi, and if to the extent you haven't already answered some of this in your introductory remarks already, but that's the order I have it in my notes to ask. So I'll just if we could
Yeah, sure. No, I mean, honestly, like, I was talking with a bunch of other people who are sort of prominent crypto skeptics, and we were sort of talking all about the the life choices that got us into this place, because this is not a great place to be. We do it as a public service. There is no money in crypto skepticism. You get a whole lot of hate. So it's like, what life choices did I make to make myself one of the more prominent crypto skeptics, and how can I avoid making them again?
Because you make reference, and then as you say, you sort of clean up the language for us. That not everybody was the most professional and mature in
Yeah.
conveying that they thought you were on some sort of payroll for
Oh,
being critical. Yeah.
oh no, and people are like, you're paid by Elizabeth Warren, you're paid by the big banks. I'm like, yeah, no, none of them give me any money. Um, so anyway, but yeah, so my path here is that I have a younger brother, and at one point he was Bitcoin curious. I was like, that sounds kind of dumb. And so I started looking into it like 10 years ago, and that's sort of how this path started. And at the very beginning of the book, I contrast two Senate hearings I did. It was December, I think it's December 14th, 2021, and then again 2022. And in 2021, I was talking about stablecoins, and this was, at the peak of an earlier or crypto bubble, and I was there pouring cold water on it, and everyone wanted to tell me I was a crazy person. And then a year later, I was back, and it was right after FTX had collapsed, and I was talking about FTX, and everyone was saying how right you were. And now we're back at the top of the bubble, and everyone's telling me I'm a crazy person again, and it will pop eventually. I don't know when, and then I'll be back, and everyone will be saying, how could you have known? And it's like, well, actually, it's kind of obvious. I mean, so I guess part of the reason why it's obvious to me is that my background is that I'm a financial regulation professor, and I study financial crises. I study bubbles, and it's just got all the hallmarks of every bubble we've seen before. So it's, if you're used to that, it's very easy to see. A lot of people prefer not to call it out because they're, it's the Upton Sinclair line that it's very hard to get a man to understand something if his salary depends on him not understanding it. So that there's a lot of that. But then there's also, and this is sort of what I was talking about at the beginning when I said, like, there's just this natural desire in a lot of people that want to believe that technology can change things, that this time will be different because, Silicon Valley is magic. And so because this is sort of finance fused with tech, there was this sense that, well, maybe we really can change things. Maybe this will be different from previous bubbles. And spoiler alert, it's not. The technology underlying this, the blockchain, it's a database. It doesn't change the laws of financial gravity.
So could you talk about again, and maybe just elaborate on some of what you've said already, because a lot of what you're talking about is the interplay and the relationship between technology, political economy, media narrative. What would you want readers to walk away with and as having, in terms of at least a base understanding, to the extent we don't, of what that interplay looks like? I often summarize it in just saying that technology doesn't change social relationships, but yeah,
Yeah,
yeah.
that sounds pretty good to me. But
Okay.
I mean, I'll give you a preview of the title of the last chapter is "Let's Get Skeptical," and what I want people to walk away with is, what I hope is that people will become skeptical as their first reaction to when Silicon Valley tells them something. They say, will it? I know you're trying to sell me something. Should I buy this? Instead of our current reaction, which is like, ooh, fancy tech. So really, there's so much that needs to be fixed in terms of, politics and democracy and things like that. But I mean, and a lot of that is above my pay grade. But I think Silicon Valley has coasted for so long on this positive narrative that tech will solve all our problems. And I want people to walk away with a shifted perception so that their first reaction when Silicon Valley tells them they can solve their problems is, can you really? And how much money are you going to make from this? And who are you going to hurt along the way?
You have, in fact, maybe this is as good a point as any. In chapter 4, you have a line on page 164 that there's several of these throughout the book, but that I think just crystallizes even the point you just made here. You said, but let's be real. If the goal of blockchain based experimentation were true decentralization, then no intermediary would profit, and without the possibility of a return, no venture capital firm would be willing to fund Web3 ventures. So I do want to come back and talk some about the specifics of blockchain and Web3 and all of what all that means, and maybe we could do that now. But that seemed not said so. And again, let me just, that if the goal of blockchain based experimentation were true decentralization, which is one of the big claims as you talk about with all of this blockchain and et cetera, then no intermediary would profit. If it's decentralized, nobody profits. And then obviously, and we should have been more, like, especially those of us on the left extremes politically, should have been more clear on this, that without the possibility of a return, no venture capital firm would be willing to fund all of this. So where's all the funding coming from? And folks, again, I encourage people to see the recent discussion between Dwayne Monroe, and you would be interested in his work as well. Dwayne Monroe and Millennials Are Killing Capitalism, and Dwayne Monroe and Mtume Gant speaking about it's something you do talk about, the funding behind all of this, the funding, and even in going into AI, and that they're pushing narratives around what all of this will do because they need to recoup. They need
Yeah.
to. They've. And then if it's truly decentralized, as so many still are running around claiming, then as you said, nobody profits, and then why would they be investing? So could we talk about any of or all of that, however you would want, the Web3, the
Yeah.
decentralization claims, the investment behind it, and the I guess, yeah, the interests that are driving some of the narrative around why this is our savior.
Yeah. So, I mean, just at the most fundamental level, this is kind of what I'm talking about with the skepticism, because once you see it, you can't unsee it, right? Once you understand that, of course, these people are just trying to make a buck. That's their business. So every time they say, thus making the world a better place, to take that with a grain of salt. And I'm not saying win-wins aren't possible. Win-wins are possible sometimes, but I think we're being fed a whole lot of tripe, frankly, about trickle-down innovation. We were told trickle-down economics for a really long time. We just let the rich people have fewer taxes and it will trickle down benefits on all of us. Now we're being told, just let Silicon Valley innovate and it will trickle down benefits on all of us. And actually, I get into this more on the second half of the book. And I am sorry for interrupting your binging. It's a bit of a tease this way, but yeah. So once you sort of understand the political economy more of Silicon Valley, you can't unsee it. And so when you see them say, well, yeah, we just want to get rid of intermediaries from the financial system, you're like, sure you do. You just want to be the new intermediaries, or you want a talking point that allows for less regulation of the intermediaries that are there. And so let me break down the decentralization narrative a little bit, because this really is sort of the claim to fame of all of crypto, right? They have this blockchain, which is essentially a clunky database. The one thing that there's two things that differentiate it from regular databases. One is you can't undo transactions processed on it, which they always talk about like it's a good thing, but in a world of huge amounts of fraud and also just boneheaded mistakes, the idea of not being able to undo problematic financial transactions, to me, sounds like a real problem. But the other thing about a blockchain is that it's supposed to not have any kind of centralized intermediary deciding which transactions to process. And they use it varies by blockchain, but they use all kinds of very inefficient game theory based mechanisms to essentially choose who gets to add transactions to the database. And the reason why they have all those complicated game theory things is if just anyone could add transactions to the database, then that would be a huge problem. Any bad actor could get in there, people could double spend, etc. So most databases get around this by having some kind of permissioned node, someone who's in charge of saying which transactions can and can't be added. Blockchain instead uses these game theory inefficient mechanisms, which basically says it's expensive or there's some other penalty that comes with adding a transaction or being a verifier, and that's supposed to weed out the bad actors. So that makes it all sort of very inefficient, but it's supposed to get rid of the intermediaries. But the problem is that it only looks at decentralization from a technological perspective. It's like we won't have any single node in the system that can be in charge. But you know what? If someone controls a lot of the nodes, then they get centralized control of the system, right? So it confuses technological and economic control. And if you look at crypto, like writ large, there are so many significant concentrations of control. So, you just have for Bitcoin, you have just a few mining pools, publicly traded companies that are in charge of doing the vast majority of the transaction verification. If you look at Ethereum, you have to stake your Ethereum to be sort of eligible for the pool of validators, which means you already have to have a ton of Ethereum in the first place. So that's not just anyone can participate. It's big entities like the crypto exchange Coinbase that are the key validators there. Then you look at the stuff that's built on these things. We're supposed to have these projects that are decentralized, these decentralized autonomous organizations where, there are tokens, and that means that no one person can control the DAO. Well, you know what? Corporations have a lot of shares, and they can be controlled because you can buy more than one share. And the same is true for DAOs. You can buy more than one token. And in fact, the studies that I've seen show economic concentration there among the founders and their VC funders that is far more concentrated than you would see in your typical publicly traded company. So we're not getting rid of centralized economic control. We have used some technologically decentralized structures, but they've mostly been inefficient. They don't achieve the economic goals that you want. Their best use case, if you will, is being able to confuse regulators and lawmakers and say, look, we're technologically decentralized, therefore we need a whole new legal paradigm. And unfortunately, they've been obliging.
And then to something that you raise as well, the claim to decentralization is really just stripping away all of the consumer protections. And since most of us in the world are going to be consumers that need protection from those who are the handful of sellers and owners of everything, this is another major problem. Why would we want a situation where there's no consumer protection in these transactions? And it's fed into a system that as you point out, there's a handful of miners, a handful of trading platforms. And then the last time I looked, when it comes to Bitcoin, it's like something crazy, like 90% of all Bitcoin is in 10% of wallets or something like that. There's only, everything is already, so this idea that we're going to have some decentralized, anyone can get in, anyone can make money and become powerful to the point where we're overturning centuries of inequality. It's always been bizarre to me, and I've just always appreciated when folks like you are putting some work together to help us sort of walk through the absurdity.
Why do you hate freedom, Jared? I get that a lot.
Oh my goodness. So, and this is so. I definitely had. I keep forgetting. I always confuse empathy with sympathy, but whichever one where we both shared a similar experience is the one that I felt reading some because in particular and you talk a little bit about this, and I looked it up before we got started, and it said that uh, uh, some of the latest, at least, research that I found quickly is saying that we're still seeing the same kind of by percentage of population, more involvement in cryptocurrency among Black and Latin American populations than among the white population. In part because of, as you talk about in the book, this narrative that this is going to overturn legacies of inequality. And in some of my struggles around this, a lot has been said about me along those same lines. Like, you just don't want us to catch up. You want you're afraid. And then I'm now I'm all over the place, but because, like, you also, there's labor history in your book, for instance. So you talk about this. So a similar claim that I'm feeling an affinity for is around where you talk about the history of the Luddites. Like, we often hear the term, but the narrative is incorrect. And if you're not at all versed in labor movement history, or this particular history, you don't even realize that it wasn't that the Luddites were afraid of new technology. They were just saying, no, we see that the new technology is not going to change the relationship we have to the economy, and if anything, it's going to make it worse. So we just have some questions, and then you get demonized. And then so to the point I'm ultimately getting at, I feel this affinity when you talk about empathy or sympathy, when you talk about in your experience getting called all this and that. A lot, unfortunately, has been said, relatively speaking, about me in the same way, and I was like, wow. And all in a similar way you've been saying is, I'm not mad at technological advance or this, that, and the third, but if you're going to attach to it these claims of salvation, we have a problem. So yeah,
And not
please,
just
yeah.
claims of salvation. If you're going to use the fact that it's technology to try and foreclose any discussion of its social impacts, then we have a problem, right? And that, I think, for me, is what the Luddites stand for. Like, a lot of them were actually super into tech, from what I understand. They were curious about it, they were learning about it, but they used all kinds of democratic processes available to them to try and have their concerns heard about what this was doing to the fabric of their society. And only after that sort of ran out did they start smashing the machines, right? So what I think is really important, and coming back to my mission of, like, what I want people to take away is to be skeptical. Like, ask, who benefits from this technology? How is it going to impact you? Is it going to impact for the better or worse? And, I think, what you're sort of alluding to a little bit, and I think it's true, is that there's some paternalism in my writing, for sure. I work on this stuff a lot. I think about it a lot. And I think people should be protected from it. So, as you mentioned, one of the dangers with this stuff is that because lawmakers and regulators have sometimes bought into this narrative of decentralization changes things, they've allowed different regulatory regimes for people who are providing basically the functional equivalent of financial services that are otherwise regulated. And so what that does, when they buy into that narrative and create special regulatory and legal regimes, it peels away existing consumer protections and investor protections. And I think that leaves people worse off. Now, some people say that's paternalistic. Some people think that consumer investor protection laws are paternalistic. But you know what? It is a complex and busy world, and I think it's unrealistic to expect people to have the financial literacy, the technological literacy, to be able to protect themselves from every little financial investment they make or transaction they make. And I think there is a place for regulation from people who have the sort of resources to study this stuff all the time. And, if that makes me a little bit paternalistic, I'll take it. That's the society that I want to live in, where people aren't just sort of left to be buyer beware, caveat emptor, especially when their life savings are at stake. This is, there's a big difference between move fast and break things when you're, like, sharing a photo on the internet, and move fast and break things when it's your life savings at risk. And I find it deeply disturbing that we're peeling away all of these existing regulations because of this narrative that somehow this technology will change people's economic incentives. No, it won't.
Right on, right on. And again, folks, please do all the things to support the platform, and including go to the show description at your convenience to find out more, to find a link to the book that we're talking about, Fintech Dystopia, and more about Professor Allen and her work is all linked there as well. I do have a number of other questions that I do want to get to, and then we'll check with the chat. So, folks, please either recycle or highlight or just hold on to your comments or questions that you'd like us to address. Um, so, well, one of the questions that I have centers around 2008. So could we talk a little bit about what 2008 as a year represents in terms of your narrative and obviously the history of Bitcoin, and because you talk about it at least at two different points so far in the book, where what happens in 2008 that precipitates Bitcoin, and then you come back later on to talk about what happened with 2008 specific to home ownership, which is something that has come up again around here. So could we come back to that year for a minute and talk specifically about that?
Yeah, so I mean, 2008 was really formative for me. As I mentioned before, like, I have concentrated my research my entire academic career on financial crises. I was so sort of scarred by that. I worked on the Financial Crisis Inquiry Commission that was appointed by Congress afterwards to look into the causes. And really, if I have a research agenda, it's like, not that. How do we make that not happen again? And one of the frustrations that I have with crypto is that it is absolutely replicating and exacerbating all the fragilities that led up to that 2008 crisis. And now I think it's pretty commonly accepted in financial regulatory circles that a financial crisis is coming and that crypto will be at the epicenter of it. Again, don't know when, but I don't think it's too far away, honestly. Um, but the irony of it all, as you already alluded to, is that 2008 was the moment, or the from which Bitcoin sprang, right? Like, it was supposed to be a rejection of everything that was wrong in traditional finance, and instead it's sort of gone on to replicate and exacerbate everything that was wrong with it. There's another part to the 2008 story which doesn't come up again till later in the book, but another thing that 2008 did was it unleashed a very prolonged environment of low interest rates. And during that period, there were plenty of people who were doing just fine and plenty of people who were not. The people who were doing just fine were desperate to find investments that they could get a higher return on, because with interest rates low, the more sort of staid, boring investments weren't paying out much. And so what they did was they reached for yield, is what we call it. They looked for riskier investments that would give them more of a return. And the venture capital industry was a major recipient of those funds. And so it was just gangbusters time in the venture capital industry, particularly after interest rates were really set to rock bottom again in 2020 during COVID. And so much of what we're seeing from Silicon Valley now has come out of that environment of enormously cheap money. And what it's done is it's distorted all kinds of incentives, because instead of VCs having to find sort of businesses that can become profitable, they have all this money to burn, to subsidize things, to sort of cement them into our economy even if they don't work. It's they have all this money they can use to lobby for laws. So it's really that easy money from that period, which all again goes back to 2008, is a real problem. And I actually, this isn't specifically in the book itself, but I wrote an academic paper about this, about one of the reasons why we need to stop or work so hard on preventing financial crises is what they invite is this very loose monetary policy, which then sows the seeds for the next financial crisis, because people reach for yield into crazy stuff, and then that builds a bubble, and then you're in this really bad cycle.
Wow. Okay. uh, so you also, so no one has I wouldn't expect picked up on this, but in the sort of, I guess, the subtitle underneath my name here is a reference to something that you reference in your book, which is To Snow Crash by Neil Stevenson, which does happen to be coincidentally one of my favorite books of all time. Uh, and and I will reveal to folks who don't know and don't care anyway, but that calling myself Hebrew protagonist has been a long-standing inside running joke that makes fun of my mixed race background, as was the case with the protagonist of that book, hero protagonist, who was similar to myself with a different background, a so-called mixed race pizza delivery guy. So for a time I was also, but it was a black and Japanese, I think, and mine is black and Jewish, right? And so I said Hebrew as opposed to hero protagonist, and it's just been, you know. But so I loved seeing the reference, and if you wouldn't mind, just say a word about how you bring it up and for what purposes, and anything else you'd want to say about the book. But I got a kick out of seeing that. So
Well, now I'm busted because I actually haven't read the book.
ah!
So now I got homework to do. But the reason why I refer to it is that it's sort of discuss, and it's part of this broader theme that
Yeah,
that what you see with a lot of these like Silicon Valley elite is that they read sci-fi, and you're supposed to take away from it that this is a dystopian thing that we should avoid against, and they go, cool, let's do that. And so that book has been, apparently was the sort of the inspiration for Mark Zuckerberg wanting to build the metaverse. Um,
which is
and
crazy, and that's, I'm sorry to interrupt, but that's so upsetting because it's really, if anything, a Marxist critique of all of this. It's a critique of privatization and what the dystopia it creates, and then the lead characters, and I won't ruin it for anybody, but so that it's so wild that, as you point out, someone like Mark Zuckerberg could read the same book I read and then walk off in the complete antithetical and, opposite direction. So that's I wasn't ready for that. I didn't. But anyway, yeah, yeah, yeah.
Well, no, I mean, and actually, I did talk about it in chapter 4 a little bit more, so clearly more on my level because I'm a mom. Wally, the movie, the Pixar movie, which at the beginning is sort of this vision of what the world would like if all our human interactions were intermediated by screens and we just sort of floated around without any human connection. And I sort of say that seems to be what Sam Altman is going for with the OpenAI and his WorldCoin. So this is a whole thing. Sort of speaking of dystopian. So Sam Altman has this side company, World, which is a crypto company where basically they are paying people in crypto for their biometric data, because the goal, I guess, is to one day put everyone out of work. So the only thing that we'll have of a value to give is our attention, and we'll get paid for our attention. But they don't want people double dipping and pretending to watch multiple things at the same time. So they need to be able to verify our iris scans. So to figure out how to do that, they're going to pay people now for their biometric data in crypto. And they've been doing that all over the world. And now it's here in the United States, 2025. And it just like, again, this is all the stuff where I feel like most people see things like Wally or read these books and they're like, yeah, that's definitely what we should not do. And then you get these tech bros who are like, yeah, that.
We want everybody sloppy and unhealthy and stuck to a screen that we control the content of. Yeah, yeah, you're right. I mean, not that I'm qualified to assess it, but it's suggestive of somebody's psychological outlook. That would be the conclusions they would reach. Another thing I got a kick out of is that around here, the acronym BAP is a positive reference to Black Alliance for Peace, but in your book, it's the bullshit asymmetry principle. So could we talk about your BAP as opposed to our preferred BAP? But the bullshit asymmetry principle was hilarious. Well, not what it is, but the acronym part was hilarious.
Yeah, I mean, to be clear, I like yours better too. But
Yeah.
no, so I can't lay claim to this. I stole this is from someone's Twitter post, the bullshit asymmetry principle. But basically, the idea is that you know anyone can spout off bullshit like that, and then to refute it, you need orders of magnitude more sort of time, space, expertise, and so we're in a position where, like, yeah, you get bullshit out of Silicon Valley, and if you want to refute it, you end up writing a 9-chapter internet serial called Fintech Dystopia because it takes that much space to refute that bullshit. And that's, you asked me again what I hope to achieve. Part of the reason why I want skepticism to be people's default is so that we can sort of invert the bullshit asymmetry principle, right? So that, instead of us having to painstakingly refute what Silicon Valley says, the job is on them to painstakingly build our trust, because we hear that you're going to do something, we're like, no, it's not going to work and you're going to hurt people. And then it's on them to explain in detail and convince us why we're wrong.
Yeah, right on. So another couple more things that and then I'll check the chat, I promise. But you talk when I was so happy to read about your discussion of Robinhood and GameStop and this movie. I admittedly I don't have your expertise. So, but as it was happening years ago, and people were even in our spaces around here, oh, the little guy's getting them, the hedge funds are gonna get it, and the big and you see we can organize ourselves through micro investments and so on to create a revolution. And I was just sitting there, wait a minute, the same I just kept describing it as the same hedge funds and big money. They're making it on both ends here. You're not, and Robinhood, like it's the little guy isn't winning here. And then they turn it into a movie that you correctly, it like ends the movie like, we're walking off into the, we can.
The retail investors have triumphed.
So could you please, however you would want to, and people really should read the book and get all the details so that we can be, but so that we are prepared for the next wave of this and can respond to it in real time. What really happened with and what is Robinhood and similarly situated platforms? What is really happening here, or what happened?
Yeah. So the way Robinhood makes money is that they sell your order flow to big Wall Street funds or firms.
And who's the order flow? You mentioned it.
No. Yeah.
Okay, I got you. Thank you.
What I mean by that is order flow is when you place an order to buy something or sell something with Robinhood, instead of sort of going directly to an exchange, I mean, sometimes they go directly to an exchange and find a matching sale or purchase, but often they sell your purchase and sale orders to these big Wall Street firms, and these Wall Street firms give money to Robinhood. And if you're wondering why, it's because they can get a better price on the purchase and sale and fill those orders, and better than the price that you're getting. So that is the big business. If you want to know how Robinhood makes money, it is from selling your purchase and sale orders to big firms that can do a better job making purchases and sales than you can, right? Now, what that means is the more you trade, the more you buy and sell, the more money Robinhood makes. And any research, I mean, I cannot tell you how voluminous the research is on this, but that for retail investors, just actively trying to trade and get ahead of stocks and beat people, it is not a winning strategy, right? Buy and hold, go away, buy and buy like a passively managed mutual fund and go away. The research is sort of overwhelming that is the best strategy for retail investors. So when Robinhood is actively encouraging you to trade, it's like a slot machine basically. They're trying to get you to go, because they make money every time you do a trade. And the more complicated the trade you do, the more they get paid. So to give you a little frame of reference, Robinhood's not the only one that gets paid for order flow, but a more stable customer base that doesn't trade as much and that is more sophisticated, they make less from payment for order flow than Robinhood. Robinhood makes the most from payment for order flow because it has the most unsophisticated traders and they trade the most. And the more like complex trading strategies, like weird options trades and things like that, those earn the most payment for order flow. And they're also really the most challenging for retail investors, because if you buy stock and it turns out to be a bit of a dud, the price will go down, but you'll still own the stock. If you buy an option, you're essentially betting on the movement of the stock. And if you bet wrong, you get nothing. It's gone, right? So, this is just a business model. And again, this is coming back to the point I made earlier about how I am a little paternalistic about this stuff. I do not think that these trades are in people's best interests. They are enormously profitable for Robinhood. They're clearly making a lot of money for the Wall Street firms like Citadel Securities that are buying order flow. But if you're genuinely trying to sort of make a go, and sort of particularly if you don't have much money to start with and you're trying to sort of build wealth, like this is a really, I think, predatory business model. And something I do in the book, and I'm really sort of sympathetic to this, is that we're in such hard times for so many people. Like at least half of the country was living paycheck to paycheck before 2025. And now we've got this one big beautiful bill that's going to make food assistance harder to come by. It's going to hurt access to healthcare. Like people are only going to become more precarious. And I know that in those circumstances, it can sort of seem rational to engage in Hail Mary bets, because what's your alternative? And so I don't know what the right answer is in these circumstances, but I can tell you that the odds are not in your favor using these kinds of services, investing services.
So I did a word search, admittedly early on, and didn't see it, but so I wanted to ask you about what you thought of this, because in my narrow bit of work, the fintech platform Greenwood Bank plays sort of an important role in the mythology, targeting particularly Black audiences around get into bank, get banked, get bank through us, be a Black supported platform, and I just was looking up this morning, just basic Google searches, which are also include AI responses, which we can come back to, is because the point my point is that I thought I saw the parallel being that Robinhood as a platform functions similar to Greenwood, but specific to a broader audience, that is as a portal that invites retail investors to come in and do what you just described, support this larger infrastructure by, I forgot even some of the terminology used, some like violent, language about being the pigs to the slaughter or something
Oh,
like
pig
that.
butchering.
Pig butchering, which is
Well,
just the,
that's crypto. That's a crypto scam.
okay. But as I understood, it was a similar, but the idea being that you got to get these retail, these basically the routine suckers to come in and invest and to trade, and the more that they do it, win, lose, draw, whatever, the platforms and those already invested in owning everything make all the money. And then when you talked about this, and then there was like there's other platforms that are specific to other, like there was now I'm forgetting, but a couple months ago, or I had found there was like a portal that targets the LGBTQ community. There's a portal that targets the Latino community. The Greenwood Bank platform targets the Black community, all with a similar, at least it seemed to me, goal of here's the particular door that will welcome every bit of society in. You even talk about Professor Yamada Taylor's discussion of predatory inclusion, I think, or predatory
Yeah.
diversity, or something like
No,
that.
predatory inclusion. Yeah.
Yeah, like we want everybody come on in. We have the door sign for you. If you're Black, if you're LGBTQ, if you're a Latina, we have, here's your doorway, your portal. Come on in with the promise of improved conditions for you and your community. And at the end of the day, and it does say, the AI response does say Greenwood may be benefiting from this. What is the language again?
Predatory inclusion.
No, the order flow, the
Oh, the payment for order
the
flow.
payment for order flow, which, as you point out in your book, is a Madoff, Bernie Madoff
Invented that. Yep.
invented thing. So in other words, they say come on in, and whether with all these promises, but whether you do well or not, whether you make money or not, whether you save, whether you get loans through your bank, whatever you're doing, whether you're trading and making money on this, that, or not, or losing everything, they make money, and that's their sort of purpose. So I just saw this, as I'm understanding this huge overlap between what you're saying in my limited approach, or my limited focus, and again, why I want people to read your book and to hear this discussion, to say, listen, this is, anyway. Did
Yeah.
that make sense? Okay, all right,
Yeah,
okay.
no. So I'm not familiar with that particular bank, and it also sounds like it's not just doing banking services. It sounds like it's doing investments as well. So I actually I don't
Well,
know what.
I'm not entirely sure. So it's Greenwood it is fintech. It's not a bank, and it has a partnership with a bank in California that underwrites everything that it's doing, which is again similar to what I understood you to be
Yeah.
saying about Robinhood, and that the banks, like the banks, are the ones covering the um they have the whatever is being, like, they have the money, they have the whatever.
Yeah, I mean, look, there's lots
Anyway,
of different fintech business models. There are a ton of fintech banks as
okay.
well, and I get into them in chapter 3. And again, this actually was a big issue with, and again, there's a lot of these fintech banks, neobanks that particularly target communities, as you mentioned. Things like Cash App or Opportune or things like that. And there was a big problem with some of these, not those two, but with I think Yoda and Juno and maybe Mercury, if I'm getting the names right. There was a big problem because they had this middleman. They were all partnered with actual banks. They were taking people's money, but then the middleman failed and its record keeping failed and no one could find a lot of the money, et cetera. So each of these business models is different, but I think the point that you're getting at, which is important, is that when you have people offering sort of these lightly regulated alternatives to traditional financial products, you are giving up some consumer protections. So when you use these kinds of like bank alternatives, you're forfeiting deposit insurance. That's huge. And a lot of people don't realize that. And I think, again, we probably shouldn't be surprised that in an environment of economic inequality like we have, that people are seeking to profit from said inequality. And they often profit from that inequality by, dressing up their products in narratives of inclusion, etc. But often, as you mentioned, that's exploitation, when you really get down to it, because you're getting a worse alternative than the regulated product, because you're forfeiting consumer protections, deposit insurance, that kind of stuff. And so that sort of gets to a really broader point that I wanted to make with all of this, which is that, when we trust tech products to fix all our problems, it distracts us from the actual problems. So we have huge wealth inequality in this country, and there is no investment opportunity on earth that is going to fix that. If half the country is living paycheck to paycheck, they don't have anything to invest, right? And some people don't have access to financial services, but the reason why is because it's not particularly profitable to provide financial services to those people. And so the people who rush into that market, who are less regulated, are going to provide exploitative versions, because that's how you make profits. So if you want people to have access to basic financial services, as I argue in the book, you need to mandate that the banks provide them. And lots of countries do mandate that banks provide low-cost banking accounts that have all the consumer protections, that have the deposit insurance. Sure, it takes a little bit of will from Congress, but you can sweeten the deal even for the banks if you want to. You can subsidize it a little bit. It's really not that big a deal. You don't take on a lot of risk as a bank from giving a bank account to someone. It's not like you're making a loan to them that they might not pay back. Sure, you could lose out on some operational expenses, but maybe we can do a subsidy for that. And so the solutions are sort of there in plain sight. You want to solve like wealth inequality, then you've got to go back to safety nets and things like that. Unemployment insurance, better, or even employed, you need a better minimum wage. The answers are simple, we just don't like them. And so one of the challenges that I think is plaguing our present moment, particularly now, but even in the years prior to 2025, was that when things were a little sort of a bit of a tough political sell, even though we knew the right answers to solve problems, it was much easier to just say, oh, look, here's the tech industry. They can fix everything. They're going to come in with this shiny new product, and we don't have to worry about fixing these structural problems.
So again, I keep saying, I even wrote it down again. The issue isn't in reading your book. The issue isn't that we need humanity that is more wealth to be created. There's plenty. It just needs to be distributed better. That's the thing. So I found a way to overlap some of the Q&A from the chat and one of that I have that I wanted to raise with you. Can someone explain how Cash App and how it works? You do talk a bit about Cash App, and could you talk about, well, in answering this question, how you discuss it in your book?
Yeah, so I've looked at so many of these, so I want to make sure I speak correctly. But I think Cash App covers it's sort of the standard rent-a-bank model, where it's not itself a bank. And if you go on it's on its website, you've got fine print. At least when I went on there, it's like bank asterisk, and then down the bottom is like Cash App is not a bank. And in fact, that's why I called that chapter "Banking the Unbanked" asterisk. So it's not a bank. What it does is it partners with a bank. And so when you use it, your money goes, if I'm pretty sure this is how this one works, it's how most of these business models work. They sort of essentially put your money in an account with a real bank. And while your money is in that real bank account, it is protected to some degree by deposit insurance, but you are not the insured person. Cash App is the one that's insured. But again, it depends on how it's structured, right? So it might, I don't know about, it's theoretically possible that they have a whole bunch of individual sort of custodial accounts, one for each customer, but I don't think so. I suspect there's some commingling. And the record keeping can get messy. That was a real issue when Synapse failed that I mentioned before, and all those other neobanks, they lost access and sometimes completely lost people's money. So I guess what I would say to that is your money is not always with the bank when it's with Cash App. And it may not, if the bank were to fail or if Cash App were to fail, it might not be clear that your money is your money, or that your money is protected by deposit insurance. So that's just something to be aware of in these banking relationships.
And they also want to make it very easy in the app to buy cryptocurrency.
Yeah, there's that too. I mean, so I don't use Cash App, but I use Venmo just because it's convenient. But I always make sure to never carry a balance with Venmo, right? So if someone sends me money, I get it straight back into my FDIC insured deposit account. And Venmo is always trying to get me to invest in crypto, and I'm like, do you know who you're talking to?
You don't, right? So speaking of which, there's the contradiction was raised by the chat here that there are ads running on the stream for crypto, and that's my fault. I apologize. I did monetize the stream, but I haven't. I just was going through it a little bit ago, and we'll go back after the show for more. But you can like the detail with which you can select which ads not to get is more intense than I initially realized. So I thought I had some things blocked, and clearly did not. So I will address that, and I apologize to everyone suffering that. So, but speaking of which, someone was asking about and raising a question again about decentralization. So, and I'll invite you to say more about that in the context, if you would, about what I wrote in my notes here: Peter Thiel in Honduras.
Oh God. Yeah. Yeah, so this features heavily in the second half of the book. So this is again a teaser. There's this whole movement called the network state movement, and this is the kind of stuff. Actually, this is coming out in the chapter that I'm dropping tomorrow morning. And I just keep saying, I'm not making this up. I promise you, I'm not making this up. This is actually what they think and what they're doing, and I promise I'm not making it up, because it just sounds like ludicrous, but it's true. So there's this thing called the network state movement. Peter Thiel's behind it. Venture capitalist Mark Andreessen's behind it. A lot of people who used to work at the Coinbase or still work at the Coinbase crypto exchange are behind it. And the idea is that they essentially want to secede from democratically elected governments using the blockchain as infrastructure for their new society that will be run kind of like as tech CEO-led dictatorships. And so they've been trying this out in a few places, and one of them is in Honduras. So I'm gonna get this a little bit wrong because I'm not an expert on the Honduran political economy. But basically, I think they had a pretty bad government, and that government signed agreements to essentially create this sort of special autonomous zone inside Honduras called Prospera. I think it's in Roatan, where essentially the laws of Honduras would not apply. And so they've been using blockchain as the infrastructure. They're doing sort of unlicensed gene therapies, as well as some other stuff. And anyway, then there was a change in the Honduran government, and the Honduran government tried to cancel this sort of grant of special autonomy. And now they're being sued. The government of Honduras is being sued in an investment tribunal, and it sounds like all these tech CEOs are trying their damnedest to potentially bankrupt Honduras for not letting them have their special law-free autonomous zone in Honduras, and it's sort of a blueprint for what they're looking to do in other places as well.
So again, all these claims around decentralization and freedom are really meant to allow these
Freedom
handful
for
of,
them.
that's it. And they want to take, and I just couldn't help again the contradiction of Honduras is again theoretically supposed to be like all these other countries on the planet now, decolonized independent nations that now are being invited to throw all that away for a handful of billionaires to reside in their country without any law or oversight from a government that theoretically at least was born out of a struggle for independence to take care of its own population. So it's a wild dystopian attempt at reversing whatever so-called progress has occurred.
So it's not really sort of my field, but there's some really interesting geographers who are looking at all of this as a neo-colonial project. So Peter Howson has a great book, which I reference in my book, called Let Them Eat Crypto, that talks about this. Olivier Joutel has written about this as well. Like it's definitely something that, an analogy that people, maybe it's not even an analogy, that people are looking into.
No, absolutely. And Howson's, I'll invite folks to check that out as well. He's been a guest here, I think, a couple of times now as well. So absolutely. I did have. Could we talk just quickly about the Bork intellectual takeover? Because I thought this was important in terms of the shift
Yeah.
of narrative, and then if it relates at all. The last big question that I had before we head towards a close is your discussion in chapter 3 of political power, of the political power of the dollar, as opposed that and how you to. So if you want to connect the two, or if they're already connected, please go ahead. Yeah.
Yeah. So chapter 4, you're not supposed to pick your favorite children, but I really love chapter 4. I think what I do is I talk about, first of all, how crappy blockchain is as a technology, but then I use that as sort of as a lens for showing us that like technology is not neutral in any way, shape, or form, and our claims about what technology will do will always be filtered through our values. So, we're told that the blockchain will make things more efficient, that it will improve competition, that it will make things more secure. And frankly, those are sort of bread and butter claims for Silicon Valley. More competition, more efficiency, more security. And once you start looking at it with the blockchain, you see that actually different people have very different perspectives and values about what counts as efficiency, as competition, as what type of security we really value. And so Bork comes into it in the context of sort of competition and antitrust law, and this is a place where it's just sort of being so naked how value laden concepts are. So antitrust law in the US started out as really quite robust, trying to constrain all kinds of concentrations of economic power. And then you have this sort of, over time, it just gets narrowed and weakened and weakened. And Robert Bork was a key figure in all of this. He was also sort of, an interesting character in many respects. He was the one that finally followed Nixon's orders after other Department of Justice figures had sort of refused to fire people on his orders. He's the one who did follow the orders. He was nominated for Supreme Court seat, and in addition to his views on competition, he sort of had made some pretty iffy statements on gender and racial equality, and so he got blocked, and then that, to this day, the Republicans will say that's what ended up polarizing the judicial confirmation process. I would say, and others have said, nominating him in the first place was probably what polarized the judicial confirmation process. But anyway, he had this view. He was a leading antitrust scholar that basically, so long as consumers didn't pay too much, then we shouldn't worry about antitrust at all. So it just got really weakened. And so, like, this idea that concentrations of economic power don't matter, these ideas that, especially now when with so much of Silicon Valley, you're not paying, so you are the product. Consumer prices don't mean much, right? It's more about how your data is being used against you and things like that. None of that sort of even figures in that Borkian conception of what antitrust law is all about. And then you get a shift with the Biden administration where they brought in three key players, Lena Khan, Jonathan Cantor, and Tim Wu, who were all about bringing back antitrust to its sort of robust roots of tackling outsized economic power that could distort markets and democracy as well. And against that backdrop, the folks in Silicon Valley hated that, in large part because, well, first of all, you had the big tech platforms who clearly have monopolies, and I think that's been established, by reports by the FTC that they have monopolies in certain areas. So they obviously didn't like any threat to their power. And then interestingly, you've got Mark Andreessen, who frankly, he's the recurring character throughout this entire book. He's a venture capitalist. Not everybody's familiar with him. He really has, in my mind, done a lot of damage. But he didn't like this new approach to antitrust because it prevented or held up sometimes the largest tech platforms from acquiring small tech startups because it was merger reform. And he invested in all these tech startups and wanted to offload them so that he could cash out. So he hated this new version of competition. And so one of the things that he and his partner, Chris Dixon, who wrote a book about this, were trying to do with blockchain is to say, no, blockchain will make competition. It'll get rid of all the intermediaries. So we don't need antitrust enforcement anymore. The technology will take care of it all. But, as I've said again and again, technology doesn't change people's economic incentives. It doesn't really change the facts on the ground in that way. And that is a nice segue to the point you brought up about the dollar in chapter 3. So there's this talk about how, our dollar needs to be turned into a stable coin and put on the most sophisticated technological rails because that's how it's going to have dominance. And I quote the economist Martin Chorzempa on this. It's like, no, that's the technological rails are not what give currencies supremacy. Trust in the economic systems of the countries issuing those are what give currency supremacy. Being used in trade is what gives those currencies supremacy. So the hypocrisy is always off the charts in this space, but Congress just passed a stablecoin law that will be real bad for reasons that I explain in chapter 3, and it's being signed into law. And one of their main justifications for signing that law was, well, the US dollar will lose its supremacy if we don't put it on these new stablecoin rails. And to hear them say that at a time where they're happily allowing the president to threaten the independence of the Federal Reserve, to engage in damaging trade wars, now those are the things that are going to hurt the supremacy of the US dollar, not failing to put it on a blockchain.
This, again, one of the things I appreciate about how you've approached this, first of all, that the book you've made available for free, and that's really particular to my interest, is that you've expressed openly your anger. And I happen to like when people are okay with that. And because one of the things that really was upsetting to me was, in my limited engagement around all of this, was in literal debates around this, was being told this, again, the narrative as a subset of a broader set of narratives, that for Black people in looking to engage in some sort of liberatory struggles, there's no need to engage the political system. We don't need politics. We just need the money. And then I'm saying, to whatever extent we feel that the electoral political environment is a solution. My point was still that this is a political issue. It's not a financial one. And if you want political power, that's what should be the focus, not this fantasy around, well, we'll get all the Bitcoin and then they'll be forced to give us political power. And then almost immediately a 180 is done and all the Bitcoin crypto enthusiasts are buying up Congress people, and to your point about Horowitz, I mean, and Andreessen at least, doing a 180 on who they support. I mean, they were big time Democratic Party philanthropists. And again, I'm left of the Democratic Party as well, but still, that they were Democratic Party enthusiasts for a long time, and friendly with all the Clintons and Harrises, Obama, like they were all like in the same social circles even. And then all of a sudden, to your point, oh, wait a minute, Biden's getting too aggressive on oversight and we're going to support Trump. And there's a subsidiary effect throughout the Senate and the House doing the same thing. And I'm saying to all the Bitcoin folks, you were telling me we didn't need this. And then 5 minutes later, you run to it. And then now that Trump is talking about reserve currencies and the value is going up, I just looked it up. It's, what is it, 100 almost 120,000 for Bitcoin now. And it's like, it's so I was like, so anyway, so I got a lot of grief over that, and then they turn around and do this exact same thing. So it was great to see you discuss that, as you said in chapter 3. That, wait a minute, this is you can correct me if I'm wrong here, at least as much a political issue as this whole claim around we just got to get our money right and then we can engage the politics.
Well, I mean, money and politics will never be devoid. You will never get enough money. They will never, if people are trying to keep you down politically, they will never let you get enough money to become a political challenge, is my take on it. And yeah, I mean, as you said, like, I am angry. I have no poker face in person, and I really struggle to have a literary equivalent of a poker face as well. And frankly, I think these times call for someone to actually call it like it is. And that's part of why, I've published academic books before, but you have to be a little more even-handed there. You have to be a little more circumspect, and I think we're beyond that. And I mean, I still publish academic articles on this stuff, but I think the anger needs to be there, because what is happening is egregious.
Professor Allen, thank you very much. I don't have any more for right now. If there's something more that you wanted us to get to or that I didn't invite you to, please. I'm not rushing an end, but I don't want to, I do know that I need to finish the book, and and I cannot wait for the part 2 to this discussion. But for the time being, I don't see any other than some interesting comments, pressing questions. But is there anything that you would want to have said today that I didn't invite
Not that
so far? Yeah.
not that I can think of. I'm sure something will come to me, but we can save that for part 2.
Yeah, right on. So listen, thank you very much, Professor Allen. I'm going to let you go and then say a couple words to our undefeated chat audience before we fully close. But I thank you very much. Again, I want to remind folks that they can find the link to the book and catch up to the series. Chapter 7 drops tomorrow. I think I'll be caught up by then and get back on schedule, and then I will be in touch with you very soon to start setting up the second follow-up, or at least the follow-up to this discussion. But thank you very much. I really appreciate this.
No, I appreciate this. I look forward to seeing you again for part 2.
Right on. Take good care.
You
All
too.
right. All right, everybody. Big thanks to Professor Hilary Allen. Again, please do check the book in the show description, and let's maybe catch up together on the homework, and we can all be caught up by the time she's back for part 2. I did want to come back really to this question. I appreciate the contradiction being called out around the ads that were popping up, and I have already started and will continue to go back and turn more of the stuff off. I turned off a number of things that they're not supposed to be advertising, but I'll go back and get rid of some more stuff. And I appreciate the being called out on that. Welcome, Starscream, as a member. Appreciate you joining. And I'll take your word for it, RD, that you caught the snow crash reference. I'll take your word for it. I appreciate that. And there was something else I was going to say. Anyway, let me just wrap up here real quick, and thank you all very much. So listen, please do like, share, subscribe. Please invite your favorite crypto enthusiast to, at minimum, watch this discussion and our previous one and our next one. And if they really, really want a well-written, easy to read, even at times fun to read, despite the severity of the issues being discussed, book that is free, please send them the link that's in the show description to get Professor Allen's work. I really do appreciate when those of us in the academic world, especially those who produce more scholarship than I do take the time to write publicly, popularly, freely accessible work, given that most of what we're invited to do is kept behind very expensive paywalls for a handful of other scholars to read, so that we can maintain our careers, et cetera, and so forth. So please, for all the criticism that academia gets, some rightfully so, let's at least be appreciative when these kinds of works are done, especially in this kind of wave with this kind of topic. And exactly, I'm just against freedom. But all right, listen, everybody, peace is always only if you're willing to fight for it, as Fred Hampton used to say. Thanks again for joining us this morning, and we'll catch you next time with more.
And what do you sacrifice?
Calm, kindness, kinship, love. I've given up all chance at inner peace. I made my mind a sunless space. I share my dreams with ghosts. I wake up every day to an equation I wrote 15 years ago for which there's only one conclusion. I'm damned for what I do. My anger, my ego, my unwillingness to yield, my eagerness to fight, that set me on a path from which there's no escape. I yearn to be a savior against injustice without contemplating the cost, and by the time I look down, there's no longer any ground beneath my feet. What is my sacrifice? I'm condemned to use the tools of my enemy to defeat them. I burn my decency for someone else's future. I burn my life to make a sunrise that I know I'll never see. Now, the ego that started this fight will never have a mirror or an audience or the light of gratitude. So what do I sacrifice? Everything.
I mix what I like, what I like, what I like, what I like, what I like.